Hello everyone, it's Carla Gaspar with Flo Mortgage. So today I want to talk about the very first process if you're thinking about buying a home. So if you're thinking of buying a home tomorrow, in a month, or a year from now, what is the very first thing that you should do? The very first thing you should do is take a look at your credit. Credit is the most important thing in the loan process. It's the very first thing we look at. It tells me what kind of loan program you can qualify for, if you can qualify for a loan program at all, what kind of interest rate you'll get. So your credit score is a very, very important part of the puzzle for a mortgage. We have 3 credit bureaus that we use: Experian, Equifax, and TransUnion. And you can pull one free credit report per bureau once per year. You go to annualcreditreport.com and you pull your Experian one day and you look and see what that score is. And you go through that credit report. Go through and see, is everything that's on there yours? Have you made payments on time? Is there something there that was, charged off? You had a cell phone, years ago and you gave it up and, now they're listing it as a charge off. Look at everything. Make sure that everything is correct. And 3 months later, 4 months later, pull the other bureau, pull a TransUnion. 3-4 months after that, pull the last bureau. That way, in a year's time, you've looked a full picture of your credit report. The next important thing with the credit is, are you a co-signer on the loan? Years ago, you had a friend that they bought a car and, they said, can you just co-sign for me? Yeah, sure. You're such a great friend. You co-signed. Well, is that person making payments on time? Because if they're not, that's going to carry over to you. Because anytime you co-sign on a loan, anything that happens on that loan gets reported under your credit score as well. So be very careful when you think of co-signing on a loan. The other important thing is, are you currently renting? Because if you are, maybe your landlord or the rental management company can report your rental payments on your credit report. That's a huge, huge thing for when you're applying for a mortgage. Because a mortgage company will look and say, well, this person's been renting for 2-3 years. They've always made their payments on time. You're going to be a less risky type of borrower when they see that. So check with your landlord, with your rental agency. Maybe that's a possibility. And if you are co-signing with somebody, so it's you and another person on a mortgage, make sure that your credit scores are aligned, because we look at all 3 credit scores for each borrower, and we take the middle credit score of each one. And of those 2 middle credit scores, we use the lower. So always make sure that, when you're co-signing with someone, that your credit scores are pretty much aligned. And the final thing that I would say is, we hear this a ton. Like every time I take an application, I ask somebody, what's your credit score like? What's the range? Oh, it's great. I get my credit card statements every month and, it shows it on there credit-wise or Credit Karma, and it's this and it's that. It's 780 and above all the time. Well, that's great. But however, the credit score that we pull for mortgage qualifying purposes is very different. It's a different scoring model. So those credit scores that we pull tend to be lower than what you're going to see on those bank statements and on, Credit Karma or anything like that. So it's really important to understand your credit, pull those free credit reports that you can through annualcreditreport.com, and, reach out to your loan officer. If your credit's a little bit low, maybe it's not low that you can't get a loan. There are a lot of loan options out there for low credit scores, for medium credit scores. Reach out to your loan officer, talk to them, and get a plan in place. So credit is the very first thing you need to pay attention to. Thank you, and have a great day. Comment, like, and subscribe.